Howdy, everybody. Welcome, Liberty Call. Today is Friday, August 23rd, 2024. Hope you're having a great day out there in the interwebs. It's a beautiful sunny day here in Colorado. Yesterday, after I bragged about how nice it was, it rained. It's crazy. Anyways, didn't get to go out and play outside because by the time we got upstairs to go outside and the skies had opened up. And I was like, well, I mean, not that my dog was very upset. You know, there we got plenty of room in the house to for him to run around. But anyways, so I hope you're having a great day out there. It is, like I said, Friday. We're heading into college football starts this weekend. Got baseball. Their Astros are in the middle of a 4-game series up in Baltimore, which they played pretty good yesterday. So let's cross our fingers. They're only 4 games out of the second best record in the AL. So hopefully they can get that bye come playoff time. So, all right. Well, if it is your first time watching Liberty Call, if you could do me a favor, give me some thumbs up, a like, a share, subscribe, a follow, and press that notification bell. All right. Well, before we get into the news today, we're going to, this was on, when was it? Yes, I think it was yesterday or maybe the day before. It was the Commerce Secretary, Gina Raimondo, being asked about the revision in the jobs numbers. Now, this is the Secretary of Commerce that is being asked this question, and let's just watch.
Trump is already addressing this on the campaign trail. So let's take a listen to that one together.
The administration padded the numbers with an extra, listen to this one, 818,000 jobs that don't exist. So they said they existed, and they never did exist. They built them up so that they could say what a wonderful job they're doing.
So when you hear that, do you potentially think that this new numbers could be a liability for this campaign?
No, when I hear that, first of all, I don't believe it because I've never heard Donald Trump say anything truthful.
It is, though, from the Bureau of Labor.
I'm not familiar with that, but...
All right, we'll stop that there. So, just hilarious. I mean, absolutely hysterical that, get this off the screen. There we go. All right, yeah. The Commerce Secretary seriously doesn't know that they did a revision, a huge write-down earlier in the day. It just, I mean, these are not impressive people who work for the government, so... I mean, if you think these fools who are politicians and high-level people, they're just lackeys and friends. I mean, anyways. All right. Well, let's now get into the markets and see how they did today. The Dow Jones finished the day up 1.14%, 462 points. Closed at 41,175. S&P 500 also up 1.14%, 63 points. Closed at 5633. NASDAQ up 1.45%, 254 points. Closed at 17,874. The VIX fell 9.63% today. It's at 1586. Canada up 1.08%. Brazil up 0.5%. And Mexico up 0.41%. Headed to Europe, Germany was up 0.77, the UK up 0.48, France up 0.7, Netherlands up 0.02, Spain up 1.09%, Italy up 1.02, Switzerland up 0.38, and Portugal up 0.8. Russian exchanges again in the red. MOEX down 2.32, RTSI down 2.65. And the overnights, the Nikkei in Japan was up 0.55%, Australia down 0.04%, New Zealand up 0.41%. In China, the Shanghai was up 0.2%, the Shenzhen component up 0.24%, China A50 up 0.27%, DJ Shanghai up 0.28%, Hang Seng down 0.16%, Taiwan weighted up 0.01%. All right, so those are the markets for the day. Let's hop on over to our charts and see how we did for the week. All righty. Starting out with the Dow Jones. Looks like it's going to be up about 1.23% for the week. The S&P 500, about 1.42%. The NASDAQ, 1.26%. Very similar changes for all of them. The Dow Utilities, about 0.61% in the positive, and the Dow Transports up 1.91%. So Let's go to the daily chart and go back to the Dow and see how things are kind of shaping up. Let me put my trend lines back in here. So we can see the trend line for the Dow. It actually bounced off that, at the beginning of the month when everything was just trending in a negative direction, bounced off the trend line. Now, the other two major indexes, the S&P and the NASDAQ, had already broken through. But again, the upswing, very similar charts. So we shall see. What I would look for if you're someone looking at charts would be, for example, here on the NASDAQ, will the next high be higher than the previous high? Or if it tips over, then now we have a downward trend that's starting to shape up again. So, all right, there's enough of our chart school for the day. So let's get into the economic data that came out this week. Starting out with initial jobless claims, came in at 232,000, right on forecast. Previous number was 228. Continuing claims came in at 1.863 million, forecast 1.87. Previous number 1.859. Existing home sales came in at an annualized rate of 3.95 million, just slightly above the 3.94 million forecast. And the previous number was 3.9. So a little bit of a tick up. On a month-on-month basis, it grew by 1.3%, right on forecast. Last month's number was a contraction of 5.1. New home sales grew at a 730,000 annualized rate. Forecast was 624, so pretty big beat there. Previous number was 668. And on a month-on-month number, grew by 10.6%. The forecast was only 1. So whoever was doing their forecasting on this month did a pretty lackluster job. Previous number was a 0.3% growth, and that is it. It was a pretty light week for data. So let's close that. And let's head on over to the market recap for the day. U.S. stocks rally as Powell tees up rate cuts. All right, on Friday, U.S. stocks rallied as Treasury yields dropped sharply following Federal Reserve Chair Jerome Powell's speech at the Jackson Hole Symposium, where he signaled that rate cuts were imminent due to cooling inflation and a softer labor market. Now, I don't know if imminent would be the word I would use, simply because on the chyrons on the business channels, it said maybe and probably and, we might. So I think this is someone who's just, there's a lot of data. You could make the argument that lowering rates, you could make that argument. You could also make the argument, from the administration side that says everything is fine and that, the economy is just blazing along. So why would we really need rate cuts? Powell emphasized that the time had come to adjust monetary policy, and the size and frequency of rate cuts could be data dependent. This statement increased market expectation for a larger 50 basis point rate cut in September, with the odds rising to 36 from 28 the previous day. The decline in Treasury yields was notable, with the yield on the 2-year, which is particularly sensitive to Fed policy, falling by 8 basis points to 3.93%. This drop in yields helped fuel the stock market rally today. In corporate news, Uber Technologies announced a multi-year partnership with Cruise, General Motors' self-driving subsidiary, to launch autonomous vehicles on Uber's ride-hailing platform. While Uber stock saw a modest increase, General Motors shares rose about 4%. Retailer Ross Stores saw its stock gain over 1% after raising its fiscal 2024 profit forecast and exceeding second quarter earnings expectations, driven by strong demand for discounted apparel and lower freight costs. Additionally, Workday shares surged 11% after the company shifted to a more balanced approach between growth and profitability, raised its fiscal 2027 non-GAAP operating margin target to 30%, and announced a $1 billion stock buyback plan. Overall, the day was marked by positive market reactions to the Fed's dovish signals and encouraging corporate developments, contributing to a strong rally in U.S. stocks. All right. So again, everybody's in a good mood now. It's like, one day we're in a bad mood, one day we're in a good mood when it comes to the stock market. So, I think it's just going to be like this until, that black swan flies in and ruins everybody's day. All right. Next up, report on July new home sales put together by Bryce Gill, economist at First Trust. So let's Let's see what he had to say. In July, new home sales surged by 10.6%, marking the largest monthly gain in nearly 2 years and surpassing expectations. Despite this increase, the sales pace only returned to levels seen in 2019 before the COVID-19 pandemic. The recent drop in 30-year fixed-rate mortgage rates by 70 basis points in anticipation of upcoming Federal Reserve rate cuts likely contributed to this boost in sales. New home sales are a more immediate indicator of housing market activity, as they are recorded when contracts are signed, unlike existing home sales, which are counted after the sale is closed. Encouragingly, for potential buyers, the median sale price of new homes has decreased by 6.6% from its peak in 2022, partly due to lower prices per square foot as developers are adjusting pricing. The supply of completed single-family homes has increased by over 200% from its 2022 low, adding downward pressure on new home sales. This contrasts with the market for existing homes, which faces inventory challenges, particularly as current homeowners are reluctant to give up their low fixed-rate mortgages secured prior to 2022. As buyers adjust to more realistic mortgage rates, see again, realistic mortgage rates, not bargain basement, and the job market remains strong, the combination of more affordable financing and increased inventory could fuel a continued rebound in new home sales. However, the adjustment to current mortgage rates may take time, given that many buyers had become accustomed to the artificially low rates of the past decade. Yeah, I mean, personally, I believe that we're going to see a massive readjustment in the real estate sector. I think commercial will probably have it worse. But I do think the residential, there will be some adjustments as A, the boomers die off, and B, interest rates normalize and the economy normalizes. We go through whatever future downturns. I think it'll readjust everything back to something more normal. It may take a few years to get there, but if you bought a house yesterday at, peak prices, or in 2022 at peak prices, and you might wind up upside down for a while, unfortunately, if things adjust too greatly. So just the way it is sometimes. Not all investments have profits. All right, last up, I saw this when I was scrolling through, I forget what I was scrolling through last night. This comes from MarketWatch. It says, as Kamala Harris gives her DNC speech, here's how her plans and Trump's could affect your money. And this was written by Victor Rickladis. So let's see what he has to say here in his comparison. As Democratic presidential nominee Kamala Harris prepares to deliver a speech at her party's convention in Chicago, her economic policies and those of Republican nominee Donald Trump are coming under scrutiny. So up first, inflation. Harris has focused on combating inflation through measures like banning price gouging on essential goods, though critics argue that this might not be effective. Trump, meanwhile, advocates for deregulation and increased U.S. energy production to fight inflation. Both candidates are dealing with the legacy of the highest inflation in 40 years, which surged during the Biden-Harris administration and was inked into law by Trump. So they're both guilty of creating this problem. I mean, Trump was in office in the summer of 2020 when they started all this stimulus spending to increase the money supply by 40%. So he's just as guilty, and he shut down the country too. So I mean, granted, if I got to weigh the two, I mean, who's better for business? I mean, you can kind of tell what I think. Taxes. Harris supports increasing the corporate tax rate to 28% because that's smart, and quadrupling the tax on stock buybacks, aligning with Biden's recent proposals. Trump, however, proposes reducing corporate tax rate to 15%, building on his 2017 tax cuts. The 2025 expiration of tax changes from Trump's 2017 package looms as a significant issue for the next president. And what we could do is just spend less. The federal government could probably reduce their workforce by at least 50%, which would save a ton of money, and restructure all the bennies that federal workers get. Say, sorry, your pension's gone. All those things we're going to take care of forever. The regular workforce doesn't get those sort of things from corporate America. You're not getting it from us anymore either. So tariffs. Harris has criticized Trump's proposed tariffs, claiming they would increase costs for families, which is true. I'll be fair when she's right. Trump's tariff plans include significant levies on Chinese imports, which he argues are necessary to protect American interests, but have sparked concerns about potential impacts on consumers. Again, if you raise the price of widgets by, or if you impose a 10% tariffs on widgets from China, it just makes the cost go up for the end consumer. I mean, yes, China could reduce their costs so that it's sold the same price here in America, but do you think they're really going to do that? I don't think so. Why do people always want to call me when I'm in the middle of talking? They could just log on to any of the social medias where this is broadcasting live and see that I'm busy right now. Seriously, folks. Housing. Harris plans to tackle the housing crisis by building 3 million homes and providing incentives for first-time buyers. My question is, where in the Constitution is this within the executive branch's jurisdiction to do any of that, or the federal government, in general? It's not. Trump suggests aiding home buyers by opening federal lands for development and cutting regulations to reduce housing costs. Energy and fossil fuels. Harris's energy policies are expected to be more restrictive on fossil fuel production than Trump's, despite her current support of fracking. Trump continues to advocate for increased U.S. energy development, contrasting sharply with the Biden-Harris administration's policies. Child tax credit and tips. Harris has proposed expanding the child tax credit and eliminating taxes on tipped income, building on Trump's earlier proposal to remove taxes on tips. Both candidates are vying for support among working families with these measures. Basically, it looks like Harris was like cheating off of, Trump's ideas. Granted, back when I was a waiter, do you think I reported all my tips? No. No, I made a lot more than what was ever reported to the government. So, and the little $2 I made waiting tables at Red Lobster as my salary, that's what was reported. So come get me if you want, IRS. Healthcare costs. Harris aims to extend the Inflation Reduction Act's caps on insulin and drug costs to all Americans, not just to seniors, while Trump has claimed credit for initiating lower insulin prices during his previous term. Well, here's the problem with insulin and what everyone makes such a fuss about it. I think there's only like 2 or 3 companies that are allowed in the United States to make insulin, so that reduces the capacity and supply. If it was open to anyone who could, any drug maker could, because there's very little margin in it because it's off patent. So anyone can make it. There's just not a lot of money to be made. So get the government out of it, probably, or hey, people, lose some weight. You won't need insulin so much. All right. So both candidates' proposals reflect the broader economic philosophies, with Harris focusing on regulation and social support, while Trump emphasizes deregulation and tax cuts. The upcoming election will likely center on how voters perceive these contrasting approaches to addressing the nation's economic challenges. Well, I think they're all liars, personally. I abolish the republic, go back to the states, and each state can be as liberal or conservative or libertarian as they want, and the people can segregate around, and we would all be a lot happier, personally. So, all right, well, that's everything that I had for today. If anyone needs anything from me, please go to, wait for it, DSAFinancialGroup.com. That's where you can go get all your financial planning needs taken care of. So feel free to give me a buzz. I'd be happy to help. All right, well, that's everything that I had for today and for the week. I hope everyone out there has a fantastical weekend, and I shall talk to you again next time. Adios.